Hey everybody, this is John. Welcome to the free video. Let's dive right in and take a look at the Nasdaq. That's about 1:30 Central, so the market's still open. So not sure yet exactly where this is going to close. But the question comes up was, how could you have known that a decline was likely? What are some of the things that you could look at? So for today, I'll show you the signals here and some of the heads up. I mean, we did these in the room where we caught the Nasdaq Futures short. That was good for like 25 some odd $1,000 there. And then we just did a call credit spread in NDX. And basically a call credit spread. We did this yesterday, or you sell the 9,700 call, did 20 contracts, and that's good for about $20,000. And then we also did a trade in space, of course, which has been fun, and that was good for $43,000. And so the question is, what signals did we use in all these? And then how can you get a heads up that the market is about to go? Well, so for the Nasdaq futures, what I look at, see these arrows here? If we come up and we kind of take out that prior high and then fold, it generates a sell signal. And typically what you're looking for is a move back to the mean, okay? But then there's times when you're looking to the bottom of the channel, which is what happened last time, which was what happened today as well. And so the question is, how do you know that? And then when do you get out? Well, we got out, once you start seeing some green bars here, we get out. But so the question is, how do you know that it's potentially setting up for a bigger move like that? All right, so for the markets in general, there's three things I look at. So yesterday, so today as I'm doing this, it's Thursday, and February 20th. And so when I say yesterday, I mean Wednesday the 19th. So yesterday the 19th, the trend closed just near 0.50, okay? When it closes near 0.50, that is a true overbought reading, and then typically the next day you're going to get some weakness, okay? And you can see same thing that happened there as well. So that's the first thing. That's a true overbought reading. The next thing is that we've been on alert because this put call is so low. All right, when the 10-day moving average of the put call gets this low, then basically it's just kind of like everybody and their mama is long. And in that case, it's not sustainable. And so you see we had to come up here where people started getting short to bottom out. And guess what? Now we're right here. We're at those unsustainable levels again. So when you see something like that, typically you don't want to be too surprised. You just got to be, ready for it, basically. And then, so from there, when we get the sell signal, we'll go in. But last but not least, the skew. Gosh, when the skew is over 135, that basically means that funds are frantically hedging because they expect they've seen that the risk has increased for a 2 standard deviation sell-off. Okay, doesn't mean we'll get it, but typically when you see that, we do get some pretty decent moves. Now this market has been so strong that they've been blips, but you can see not too long ago, October 2018, when that happened, we had a huge sell-off here. So the question is, does it happen again? Well, I don't know. I'm just going to follow the signals, but at least that gives me a heads up. All right. Hope it helps. You guys have a good one, and we'll see you at the next update.